Stani, the CEO of Aave, is that right?
Yeah.
Cool. Well, hey guys, I'm Clayton Roche. I'm the head of DeFi with Mosendo. And in this DeFi Nation interview, we're here with Stani, who's the CEO of Aave. Hi, Stani. Thanks for coming on today.
Hey, Clayton. Nice to having me here.
Yeah. So Aave has been kind of coming up in the chats more often lately. And actually, I saw that you posted kind of an exciting tweet about the status of what's going on. Maybe you want to fill us in on that?
Yeah, so basically, Aave launched a couple of weeks ago. Well, 2.5. Well, actually, I think this is our third launch week. And basically, we crossed now roughly over 5 million locked assets, total locked value in USD value. And the market size itself is a bit above 7 million at the moment. So that has been pretty cool stuff. Yeah, I mean, we're pretty excited and happy to kind of bring something new into the DeFi space and evolve the whole narrative further.
Absolutely. So you said that you've had about 5 million on your platform in these first few weeks, which seems like a pretty good start. What do you credit with having that kind of response? How do you think you made that happen?
I think I think there's two things. One, the work that we have done for the past year. So all that development work, innovation, and basically development is one thing, and of course the another thing is the friends that has been supporting us and basically fueling the network effect. So the DeFi space is pretty small at the moment. I mean, there's from 10 to 40,000 users, and the active community is kind of small and yet. So I think that's one of the two key components, and the latter is especially important when you have other projects out there and relying on the composability and helping you go further. And I think those are the ones that has brought us here now.
Sure, absolutely. So when I talk about DeFi lending, there's kind of like three big names that come to mind for me. I guess I'm curious if you could differentiate what Aave offers compared to the ones that are out there now and kind of ruling the show.
Totally. Well, there is one of the kind of like a key principles that Aave is trying to do now is basically to kind of widen the offering for the end users. So we definitely know that the DeFi narrative has been depositing funds and specifically stable coins and earning interest. And that's super fun because you basically get more yields than your bank, and it's
Right.
very fun for us as a DeFi community, something like that happening. And from the other side, there's always the consumption. So there's someone who is consuming the liquidity, and what we are trying to do at Aave and the protocol is to widen the offering for that consumption side as well. So basically, what we are doing is that we are providing more tools for the borrowers to basically onboard into the DeFi. For example, one of the issues is that the borrowing rates are fluctuating because of the way we have organized the money markets in the space based on supply and demand and the total liquidity. And the idea is that when you don't know what's the cost of your capital in the mid or long term, it's very difficult to control your finances. And we brought the market the stable rate. So basically, instead of choosing the variable rate, you could choose a stable fixed rate that basically you are borrowing the funds so that you can control your finances. And that kind of like encourages more people to try jump into DeFi. And from the depositor side, also we came up with so-called A tokens, which makes it easy you to calculate how much you're earning deposits, interest from your deposit. So if you deposit 100 DAI into the protocol, you get 100 A DAI, and that A DAI will grow in your balance straight in your wallet, which is easy to see. And that's kind of like how we try to largen the offerings and into the end users and onboard a bit more people into the DeFi space.
Okay, so let me ask you two questions. The A tokens, you're saying if I send you 100 DAI, I'm going to receive a DAI, and I'll actually see the balance of my tokens increase? The
Correct,
number,
exactly.
the number. So like, as
Exactly.
compared to, I'm pretty sure that I DAI with Fulcrum and C DAI with Compound, those both appreciate in value, but your balance does not
Yeah,
change.
yeah, exactly.
But
And basically what we're trying to do is that when you have your ADI balance, let's say the 100 ADI, it's easier to calculate what you are actually earning. And in the longer term, actually, you could use this currency for payments. And traditionally, usually mainstream users are used to pay for services, for example, payment services and so forth. And here you have a currency that actually is increasing even when you're basically sending and who is receiving the currency. So
sure.
it's pretty interesting note to have.
How,
And of course, like yeah.
I'm sorry, how do you go about building that to where, like my understanding with increasing a token's balance, you'd have to actually send them tokens each time, like on chain, or how do you actually work that out?
So basically, how we did it, we have a when you call a balance, well, how does the tokens usually work? It's basically kind of like a accounting sheet. So if you want to change balances, for example, it's basically a change of accounting based on mathematics. So when you're sending actually a token from person A to person B, you're just updating the token smart contract, which smart contract could be seen as a balance sheet that's updated in a distributed fashion.
Right.
And what's interesting part is that all of the wallets are usually calling the balance of functions. So when you have a wallet and you are waiting funds to receive, for example, Mosendo wallet, and what happens there is that it frequently calls the balance of functions. So you see when funds are received, and basically the same thing with all the wallets and are doing. They're calling this function, and our mathematics in the smart contract basically calculates the new balance based on the interest rate formula, and that actually in essence, what it does, it just increases your balance.
So it's able to update the balance without actually having to send tokens in an on-chain with paying gas and stuff.
Exactly, exactly.
Okay, that's right.
And
And
that's pretty cool.
it is pretty cool. And actually, someone was describing to me the same phenomenon with a different application, but it takes like a little bit of wrapping my head around, because essentially what you're saying is you're able to like adjust the balance without a transaction. Just seems kind of foreign to me, because my basic understanding of mining and validating transactions is all around, you know, avoiding the double spend, making sure that the transaction is validated by all the nodes. So it's like a little bit confusing to me to think about just sort of updating a balance. It seems like a little bit of magic going on.
Yeah,
Yeah.
yeah. I think it is definitely an innovation, and it's pretty cool thing. I think something similar in terms of stable coins, not completely similar, but something in the same technique has been used in Ampleford to basically
Okay.
kind of like balance the supply and demand rates. So that's kind of like our way to use this innovation for the end users, and I think it helps a lot because you can also do natively interesting functions. You can redirect your interest to another place. But I think the most powerful thing is that basically that when you receive the interest, no one can go in the middle and take that interest from you. So you have the token in your wallet wherever it is. That interest belongs to you. So that's like cool thing, and that's also cool thing in the all the interest bearing
Got it.
tokens.
And I shouldn't focus on this so much. I'm like sacrificing probably the interest of my audience for the interest of my nerdy fascination about this. But is the way to think of that like the interest is kind of waiting at the door, and then when you do any transaction at all, that calls the balance function. It updates the balance of that token. Is that the right way to think about it?
Exactly, exactly.
It'll update even if I'm sending a different asset from that wallet.
Exactly. You could just go and call the balance of function, and basically it works exactly the same.
Okay, cool. Awesome. Okay, we'll move on from that. Something that, you know, kind of surprised everyone, and I think got everyone sort of chatting about Aave was the flash loans thing.
Yeah.
My understanding of flash loans is you're able to borrow funds without collateral, basically in between blocks being pushed out, right?
Yeah.
Between confirmations. And it's something like if the DAI isn't repaid before the block is confirmed, then the transaction fails and you didn't actually borrow it to begin with. So
Yeah, exactly.
yeah,
Exactly.
so that's interesting. I'm curious, what's the use case for that?
So basically, there's interesting use cases there. So when you take a liquidity for one Ethereum transaction, what you can do is you can do with the same transaction so-called nested transactions. So when you borrow, you could basically sell that borrow and buy it back for a or actually buy well, usually trade in pairs. You can basically buy an asset at a lower price and sell it in a higher price and return the loan. And that's so-called arbitrage. So that's one use case for the flash loans that we have seen. And there's other use cases is basically where you just need that short-term temporal liquidity. That might be, for example, if you want to refinance your loan, for example, there might be a lower interest rate in DYDX compared to compound. So what you could do is and you already have spent that DAI somewhere, or you don't want to return the loan, a developer might build a service, refinancing service, where basically you could close your loan position at compound and open so basically you take a flash loan, return the DAI, take the collateral as Ether, send it to DYDX and take the DAI from there and return it as a flash return to the Aave protocol.
Uh-huh.
So basically, you do everything this in one transaction. You could do it algorithmically, if you will, and that basically you rebalance your loan between one place to another, and that's very beneficial for the kind of like end user consumer. That with flash loans you can build services that actually help them, and another one is the liquidation or so-called self liquidation. So if there is a CDP or basically a lending protocol borrow that is getting liquidated, so your borrowing collateral goes to the amount that you actually own to the protocol, you basically get liquidated. And in that scenario, you might lose even up to 13% of the collateral value,
Yep.
Which is pretty big for the end user. And with flash loans, you can actually self-liquidate yourself by borrowing that DAI, closing that loan, taking that ETH, selling it on Kyber, and basically keeping that most of the 13% or whatever is the figure, and return the flash loan in everything in one transaction. So this is kind of more a tool to build fair products. Sure. And of course, it basically provides more yield to the protocol whenever there's a transaction between other lending protocols than Aave.
And what's cool about that, in the scenario that somebody's able to liquidate their own Ether, you're actually helping to make, like let's say they were doing it with a CDP, or Maker Vault as they're called now. It's actually helping to make that system more robust because you're already paying the DAI ahead of time. And then the person is actually sort of taking the risk of selling their Ether, that it could potentially have even more slippage than 13%. Of course, we know that that's not likely.
Exactly.
It's actually going to support the overall ecosystem, so that's cool.
Yeah, and I think the overall picture is kind of the big picture is that developers can build this kind of different products. I think there is quite a lot of use cases now that we have mapped out that they don't need the liquidity. And one of these bridges, for example, Instadap built between the MakerDAO CDPs, now called the vaults, and the compound. So in that case, they basically had to have that liquidity to refinance the users. Mm-hmm. And they got the liquidity off chains from compound. But in case of Instadap, there are two developers who basically built this very fascinating product to basically collateralize your ETH in the Maker system, and basically won the ETH India hackathon. So all the developers kind of don't have the financial capital to probably do all kinds of DeFi products, but it definitely lowers the flash loans, the threshold to build, or they need to have the capital.
Yeah, that's wonderful. That's really interesting. I'm conscious that we're we're talking about some pretty complicated like technical and financial tools and products. But it's absolutely like when you look into how the banking system works, they do all kinds of overnight loans and very short-term loans. And throughout the period of a day, a bank might actually lend out more money than it has. It's just required to like be where it needs to be by the end of the day. So it's actually very similar to how the banking system
Yeah.
works.
Yeah, exactly. It's kind of like over the block loan or something like that.
Right. And then of course in this case though, like it's enforced by code, right? It's enforced by the smart contracts, so it doesn't have any
Exactly.
no wiggle room on it. That's cool. I'd like to shift gears a tiny bit and ask you. Actually, I'm really kind of interested more and more in the savings and growing of wealth side of DeFi. I think that it's what has attracted a lot of people. Certainly attracted me after trying my bets in the 2017 time and everything else. Like, just kind of like lost my passion for that sort of energy. And I really like, having a interest rate and having things grow gradually. So I'm actually just curious in general, like, are you a saver? Are you a fan of savings?
Yeah, I think I'm a very, very, very kind of like will not say money market, but fixed income nerd. So
Uh-huh.
basically, I really love the fact like I don't like to take risk. I don't like to invest. I really love basically interest rates and kind of like everything that goes into the system where you have a low risk yields and also kind of like different kinds of opportunities. So for in terms of saving, I think it's pretty cool. If you think about traditional asset classes, properties and stocks, whatnot, there's different risk levels, and I think like saving is cool because basically you have the asset, the funds in one form, and basically then you can shop around, and I think that's pretty cool. For example, if you are used to traditional asset classes, for example, in Finland, where I'm originally from, basically owning property is one way to traditionally for people to get wealth, and it's very different if you're getting, let's say, 4 to 5% yield on your property. It's very difficult to shop around and close that position yet until that is tokenized. But
Right.
kind of like I really I really like the idea of money markets and fixed income, and that's just something I'm passionate about, definitely.
Sure. Yeah, and I'm in the same boat. I really like watching like compound interest is really fascinating to me. Just being able to watch
Yeah,
my money grow on top of my money.
yeah, yeah.
It's like DeFi is fairly young, but the rates have stayed super competitive since it started, and it's very cool that we have this opportunity to build this thing for people to, the narrative around this is that like we're cutting out the middleman, right? And so people can actually see the real returns out of lending out their funds. Um, and yeah, so I think it's cool. I think the transformational potential on society is pretty big when it comes to the ability for people to prepare for their future. And then also this thing around I think it's called time preference. They talk about in the Bitcoin kind of
Mhm.
narratives. Like basically my money now has a higher opportunity cost than if I spend it on stuff now. I have to think about like, well, if I'd saved it for a year, I'd have this money and this additional bit. So like the cost of
Mm.
spending my money has actually gone up because the
Yeah,
potential to earn returns on it is better now.
yeah,
Yeah,
true, true, true.
I think it's a really cool thing that we can offer. I think it's just like a society positive offering.
Definitely, I think and kind of like what could be cool with the A tokens and ADA is that if people actually use it as a currency, what it allows people to do is just kind of exchange use a medium of exchange that actually is yielding all the time. I think that could be pretty cool to see this kind of like interest-bearing tokens used as a payment method. There has been times in history where basically yielding promissory notes has been used, and that could be a pretty cool thing. But yeah, I totally agree. It's very fascinating, actually.
Cool. So I'm curious. I wanted to ask you just a couple of broader questions. What do you think are some of the obstacles for DeFi going mainstream?
I think, yeah, that's a good question because I think maybe one thing is that we have solved partially is basically the UX, but I think it's just the kind of like the economy. I would not say only like the ecosystem thing, because like the ecosystem is growing all the time, and there's more and more composability layers in the, for example, DeFi space. That we have the infrastructure lending protocol derivatives and DEXs, and then we have second layer, third layer products that are consuming each other and using. But I think it's just about getting more and more people into the economy. And that's, for example, what is good about DeFi Nation is that it educates a bit the newcomers and tries to show like what opportunities you have here, and basically onboards people. Once you're in the economy of DeFi, it's pretty hard to leave because it's pretty fascinating. I think the high yields that we have now, when it's from 4 to 8% annually, those basically attract a lot of attention and gets people into the space. So I think that's the cool part from the deposit side, and I think that brings some amount of onboarding. But also on the institutional side, I think more trust, which is ironic because smart contracts are about removing that trust. But I think this maybe maturity is the right word, that letting the system mature more and institutions be more confident and on board and step into the DeFi game. But I think the yields that we have is a good way to attract and showcase what different kinds of opportunities there are. So I think it's just growing the economy of DeFi. That's the main thing we have to do now, and still keep working on the UX though.
Absolutely. But yeah, it has improved leaps and bounds even from 12 months ago. So speaking of like over the last 12 months, like I remember when Compound announced their version 2 and they announced CDI and everyone was pretty excited about that. And DYDX was doing well. And then Fulcrum is now kind of climbing up the DeFi Pulse chart in terms of the number of amount of assets on there. And like I said, there's kind of like DYDX, Fulcrum, and Compound are the three kind of big names that I think about in the lending and borrowing space. So I'm curious if you see Aave as making it so that there's 4 household names in the space, or do you plan to keep it at 3 and bump somebody?
Yeah, I think we're keeping at 3 more or less. But the cool part is that I really love those products. For example, Compound is really good system, and what Compound did, they basically kind of like modified the business model and the idea that we had in Eatland about the over-collateralized loans, and basically pulled them. And what we are doing, we're just developing the narrative of DeFi that it's not about just total value locked, and it's also about abstracting that value and reusing it. And that's what makes us more competitive towards traditional finance, when we can reuse those collaterals with for example, flash loans. But the cool part is actually that if flash loans will get more traction, what happens is that if there is some sort of transactions between the maker or, for example, DYDX Compound, what happens is that, and flash loans are used, they basically extract some yields to the Aave protocol, and they are redirected to the depositors and referrals. So that's like a cool part, and I'm really eager to see how that helps. But in general, I'm just all in for being able to grow the ecosystem that we have, and we're super lucky now in the Ethereum community that we have so many cool products and so many developers. And I just really hope that this keeps growing, not just in value locked, but actually different use cases. And now what we have done is we have basically looked what is in traditional finance and basically putting it on the blockchain and looking basically even more innovative offering. So definitely I really like what other people are doing as well. So that's totally cool.
Sure. That was a politically
Politically correct answer.
Yeah, awesome. So if people are interested in joining your community, where do you suggest they go?
I think the very best thing is depends on how new you are to DeFi. If super new, basically get everything you can do. Try to learn a lot, and if you're interested in the actual Aave protocol, just go to aave.com. So it's aave.com, and there's a lot of resources you can deposit and start earning. If you're interested in chatting, there's a link to Discord and Telegram that you can join from the site. And in general, I just recommend to explore the whole DeFi field and see what's there, and basically grab those yields that are
Sure.
are available.
Yeah, absolutely. Well, thanks a lot for taking the time, Stani. Really great to hear about what's going on with Aave, and wish you guys the best of luck. It's been a good start.
Thank you so much, and hope you guys are doing fine, and hope to see you again.
Yeah. Cheers. Thanks, man.
Thanks, man.